The largest as far as assets under management, dividend ETF across the entire stock market, is symbol VIG, or the Vanguard Dividend Appreciation ETF. Now, as far as dividend ETFs go, this is one of the best as far as historical performance, from the nice starting dividend yield of almost 2%, massive ETF price appreciation, and of course some nice steady dividend growth historically. In this video, we are going to do a deep dive into the VIG ETF and show all it has to offer and why it's definitely worth looking into. But stay tuned until the end of this video, because we are going to be going over the exact math of a long-term investor buying just $5 per day into the largest dividend ETF for 30 years straight. And let me tell you, the outcome is shocking, so you don't want to miss this. Now, we are going to go over all this and more. Right after you, please drop a like in this video and subscribe for more future content like this. Now, a lot of newer investors have the same question. What makes an exchange-traded fund a good exchange-traded fund? Now, typically it takes several key characteristics to make an ETF attractive to investors. And here are just a few of the factors to consider when evaluating the quality of an ETF. You're going to want to look into and understand the objective and the strategy of the ETF. The ETF should have a clear investment objective and a well-defined strategy. And if this strategy or objective doesn't seem really on par with what you're looking for, that should give you as an investor an obvious reason to not want to buy into it. A good ETF should also have a long-term track record. Assess the ETF's historical performance over multiple market cycles. And although past performance does not guarantee future results, an ETF that shows a strong historical performance will likely, in most cases, continue to do so. On top of that, when choosing a good quote-unquote ETF, you should definitely look into things like the expense ratio, how much the ETF costs, the ETF's diversification, or sometimes lack thereof, and this might be a little bit further down the list, but still important, things like the provider of the ETF, and of course, depending on your situation, the tax efficiency. Now, heading over to the Vanguard website for VIG, the Dividend Appreciation ETF. The overview for the ETF is pretty simple. It's its objective. Dividend Appreciation Index Fund seeks to track the performance of a benchmark index that measures the investment return of common stocks of companies that have a record of increasing dividends over time. The investment approach seeks to track the performance of the S&P US Dividend Growers Index. Passively managed full replication approach. Fund remains fully invested, large cap equity emphasizing stocks with a record of growing their dividends year over year. And of course, low expenses minimize net tracking error. Now, some fund facts for VIG. The year-to-date returns are around 10%. The dividend yield is starting at around 1.89%, which we're going to look into a little bit more later. There's 314 holdings as of now. The fund started back in 2006, so there is a nice track record of historical data to look at. The total net assets is $82.4 billion, making it the largest dividend ETF. Now, VIG has a tiny expense ratio of just 0.06%, which is definitely industry standard for this type of ETF, and the dividend frequency is quarterly. The 52-week range for VIG is 132 on the low and 167 on the high. So VIG as of right this second might not be the best buying opportunity that we could get as far as over the last year or so, but still looking at how VIG has performed historically, this ETF has moved basically only up and to the right over the last almost 20 years or so. Now, looking into VIG's holdings, these are some of the reasons on why this fund moves the way it does, of course. Technology makes up the majority of the fund, which means this fund is going to have a little bit higher beta than some other popular dividend ETFs. Technology making up almost 23%, financials 17%, healthcare 15%, industrials 12%, consumer defensive 11%, consumer cyclical 7%, basic material 4%, energy 3%, utilities 3%, communication 1%. Another reason on why I love this ETF is because the top 10 holdings are pretty much as recession-proof and as rock solid as they come across the market, if you ask me. Companies like Microsoft, Apple, United Health Group, ExxonMobil, Johnson & Johnson, JP Morgan, Visa, Procter & Gamble, Broadcom, and MasterCard. And keep in mind, there are plenty of other holdings in this fund. It's very well diversified, which means that if 1, 2, 3, 4, or 5 of these companies are maybe not having a good year, or maybe even having a bad decade for that matter, this fund is very well diversified, and the other companies, for the most part, should pick up the slack for the most part. Now, looking into VIG's dividend and some other underlying metrics, the dividend yield, like we said, is starting at 1.88%, which again, knowing the makeup of the fund, is not all that bad, considering it still is majority technology led. The dividend growth rate trailing 12 months is 8.56%, which isn't too bad at all. Dividend growth rate on the 3-year, 11.75%. Dividend growth rate on the 5-year, 9.89%. and on the 10-year is 7.88. Now, another reason why I like this ETF is because it has been around for quite a while. You see, when trying to find different stocks or ETFs to invest into long term, seeing historical data and knowing how it's performed over a long time frame definitely helps you learn a little bit more of what you might be able to expect in the future. Now, like we said, VIG is a quarterly paying dividend ETF, and as you see here, the dividend growth has been very substantial. Just over the last 10 or so years, VIG has taken their dividend from around 30 cents or so per quarter to now, as of recently, over 70 cents per share per quarter. And this is of course because VIG invests in a basket of stocks that do have a history of raising their dividends over time. So simply put, this means that if you were to invest into this ETF, you are likely, at least historically speaking, going to get paid more and more and more in the future every single quarter. Once again, of course, in theory, if history was to repeat itself. Now, lastly, as promised, we are going to see what a portfolio of only VIG would look like after 30 years of an investor spending just $5 a day, buying this high quality dividend ETF and just reinvesting all the dividends until, let's say, retirement. So we have distribution frequency on quarterly. We have dividend reinvestment turned on because you are going to be, in theory, reinvesting all the dividends until retirement. We have a $10,000 starting principal and $1,825 of yearly contributions, which is $365 times just $5 a day. We have 1.88, which is the initial annual dividend yield for VIG. We have the 10-year dividend growth rate of 7.88%, which again, this could be much higher in the future or much lower. This is all just an estimation. Then we have expected annual share price appreciation. Let's just say 7%. For 30 years invested, let's see what we get. So here we have it. Year number one, this investor would be receiving around $180 or so in annual dividends. Year number two, $242 in dividends. By year number 5, the portfolio would already double at $22,000 of principal and over $430 a year in dividends. By year number 10, the portfolio would double again at $44,000 in value and $908 a year in dividends. Remember, this is just off of $5 a day reinvested consistently. By year number 15, this portfolio would be at $78,000 with $1,600 a year in dividends. By year number 20, this portfolio would be up to $131,000 with $2,900 plus in dividends. By year number 25, over $211,000 and almost $5,000 a year in dividends. And by year number 30, this investor was to just start with $10,000, which is again a relatively small amount of money, and just $5 every single day invested. This investor could turn that initial $10,000 investment and $5 a day added to over $336,000 and over $8,100 every single year in dividends paid. So there we have it. There's all the VIG ETF has to offer and some of the reasons on why I think it's one of the best ETFs out there for investors out there that are seeking capital appreciation, nice juicy quarterly paid dividends, and also of course want to sleep good at night knowing that they own a basket of stocks that are pretty much bulletproof. But I want to hear what you guys think down below about VIG. Is this an ETF that you would add into your portfolio? And if not, comment down below what your favorite dividend ETF is. If you enjoyed this video, make sure to please drop a like in the video and subscribe for more content like this in the future. Thanks as always for stopping by, guys, and I'll see you in the next one.